Hey folks, it's Kary Oberbrunner. Welcome to Blockchain Life. I have with me some fantastic guests, a duo. Hey, I haven't had a duo in a long time, so I'm looking forward to this. We have Genevieve and we have Lior, and we'll go with ladies first. Genevieve, give us a quick little backstory on your Web3 experience or blockchain. I know we're going to get into the business poplar.money, but tell us a little bit about how you even got familiar with blockchain.
Sure. Lior and I have been friends for 10 years. He's been in crypto since 2011. And, he's been singing the praises of what was coming for a long time. And he's always been, way ahead. We've done a number of deals together, always really successful. We're both multi-time entrepreneurs. We started an incubator a couple of years ago.
Wow.
And very quickly, like 6 months in, we ended up with almost $1 million in cash. And we're like, what are we going to do with it? Kind of a high-class problem, I guess.
That's not a problem.
And Lior says, well, let's put it in DeFi. I'm like, what's DeFi? No, I kind of knew what DeFi was,
I got you.
but not a lot. And so he took me through it, and then we started sort of going down the rabbit hole of all things blockchain and Web3. And there's one thing to have this surface level understanding, and then when he went super deep with me on it multiple times, because this is not easy stuff to get.
Right.
My eyes really just opened up to all the possibilities and the enthusiasm and the incredible, crazy opportunities. And so that's how it starts. And it's been a love affair ever since.
Hey.
Not literally. He said to other people that I'm his day wife. So I guess I'm his day husband. I'm his day wife.
I got you.
So we have a great time working together. And what I love about working with him so much is I learn something every time we talk. Every time.
Yes.
And so it's a real privilege to be able to work with somebody who's like that. And then be able to go and execute on things that are actually real. There's one thing about the pie in the sky, and then the next thing is, can you take what you're learning and really activate it, right? And so that's what we're doing.
That's quite the intro, Lior.
I know. It's hard to follow that.
Well, listen,
he'll just be himself. That's all he needs to do.
I know he's smart because we're in a group together called Strategic Coach, and Dan doesn't call on everyone to share it. And he calls on the really smart people. And so he's called on Lior a bunch of times. So Lior, give us your background, because I know you know a lot of this stuff.
Yeah. So my background is in technology entrepreneurship. I've been building and growing technology companies for many years, and I kind of wear multiple hats, both the CTO hat, the chief marketing hat. I was a digital marketer and an affiliate marketer for many, many years.
Wow.
So I'm kind of in between the fabrication world, like how do we make it real, but then also the persuasion side, like how do we convince people that it's relevant to them in particular. With crypto, I got, like Genevieve said, I got in 2011. I was just looking at that email just recently, like May 28, 2011, and it was exactly a month before I moved to the United States. So I'm originally from Israel. And my brother sent me an email, bitcoin.org, I think that was the website. Hey, cool, internet money. And I'm in the Colby world. I'm like an 8 fact finder. So I'm like, okay, let's dive into that rabbit hole. And I dove in hard. So both from the engineering side of it, because I've always been interested in cryptography, the mining side, the technical side. Back then, the uses of Bitcoin was, we were using forums and the Tor network, just to exchange and actually use it, like transact with it. It wasn't as popular as it is right now because all these companies that made it accessible didn't exist. And then when the market really started blowing up again in, I would say 2016, 2017 as where most people kind of aware of that first big public boom, was super active as an investor. And as a trader. I have a former background before that. I used to be a high-frequency trading algorithm guy for a large hedge fund. So the world of kind of innovating on technology, but also looking at the financial elements of it was really blending well for me.
Okay.
And like Genevieve had said, when we had built this incubator, and it was basically an incubator of small, high cash flow businesses. We had consulting businesses, software businesses, e-commerce businesses. The opportunity when DeFi really started to catch traction was super interesting. And if it's from, let's open a BlockFi account and see what that does, all the way to the nitty gritty of yield farming strategies and derivatives and super sophisticated stuff. And now, since we started Poplar, which is just over a year ago, we just got a domain renewal, I think, from June of in June, we got a domain renewal for Poplar. So really kind of marked that anniversary. We also got into actually building in the space and being very active. Poplar started as, let's make DeFi accessible, which I think a lot of businesses now try to do. But we were looking at it from the eyes of business owners. So we were doing this manually with our own cash, right? So we were taking the cash that we were getting from all of our businesses that we weren't using. In e-commerce, you might buy inventory once every 90 days, for example, or maybe longer. You might pay your advertising every 2 weeks, every week, every month. So there's a lot of these kind of buckets where cash is just sitting there and it's in excess. It has excess capacity. It's sitting idle, but it's not really doing anything. And interest rates were, basically zero up until recently. So we were trying to figure out how can we just use our own cash, and make more money out of this, but in a way that it's liquid, because we were business owners. We're like, we need this money. So it's not about taking the money out and locking it in for like a 5-year real estate investment, right? That's not a good use case for us. So DeFi really presented a lot of opportunity. As we're diving in, we started teaching other entrepreneurs and CEO friends of ours how to do it, because they were asking, hey, you're getting a lot of return. Can you teach us how to do it? So we're starting doing these workshops. But as you well know, by step 8 out of 30, they're like, this is a bit too much. If it's the technical stuff, creating wallets, signing blockchain transactions, but then the complex, how do you even understand risk? Risk is a very complicated topic. And then keeping up with it, because the time dilation that exists in blockchain is ridiculous. 1 month is like 1 year. So if in the normal world, you might research a stock or investment opportunity for a while, and they're like, okay, I'm going to buy this company, I'm going to buy into it. The next time you look at it is, could be 6 months, could be 6 years.
Right.
It's not some high frequency decision. But with blockchain, it kind of has to be, because the market is moving so fast. So
and it never stops, meaning like we
never stops, 24/7
in the morning. Yeah,
that's why it's 24/7, and it's because DeFi has this amazing nature of it's composable, meaning it's like Lego. Somebody can create an amazing project, and another person can just create another project that ties into it very, very well. And then you can build, a 10-chain investment strategy or a 100-chain investment strategy. Any one of these things is now a house of cards, is now exposure and risk and stuff you need to manage and understand. So diving into it, we're like, there's just a lot of opportunity here. And for us as business owners, we're like, how do we alleviate the stress and anxiety that business owners have with staring at balances? I know myself, I can't speak to others, but I check the business bank account balance a few times a day, kind of like I check my refrigerator. And I know it's the same because I just saw it 2 hours ago. But there's something very disruptive about the cash doing nothing. So that's where it came. Now the company is a lot more mature. We have a very robust set of technologies around it, a lot more understanding, more markets. The product itself is more robust. So we're very excited.
Okay.
And patents pending.
Yeah.
Say again.
And patents pending.
Yeah.
Ooh.
A lot of IP developed building this product.
Are you working with our buddy Keegan or somebody else?
We have started working with Keegan as well. Yeah.
Awesome. Okay. So give us because I'll tell you what, this is like Greek for a lot of people. I'm looking at your website.
Yeah.
And people listen, if you're listening on audio, we love you. If you're listening to iTunes or Spotify, but you can also grab this on YouTube or Facebook or even LinkedIn, and you can watch our screens as well. So yield every minute. Talk through what I'm looking at.
So our core technology. We call it yield as a service. We kind of said like software as a service. We're going to create yield as a service.
Interesting.
So it's built as this end-to-end pipeline where you can identify pockets of cash that you don't use. That starts with you opening an account with Poplar, connect your bank accounts or crypto wallets. We also support that. And we do a scan of your activity and we start giving you recommendations. Hey, out of your balance, doesn't matter, could be 50,000, could be 50 million. Here are different pockets of cash that are going to sit idle for a certain amount of time, right? Maybe they're going to sit idle for 5 days. Maybe they're going to sit idle for a year. Maybe, for example, you are a profit first type of business, where every month, every quarter, you do a distribution to the partners. So you have to take any money that comes in from revenue and allocate it and so on. So different cases for cash management and how to use it. And once you identify how much money you have to invest and far along, then we pair you with investment opportunities. So we made a decision that we think is playing very well for us, which is we decided to be first of all, a software company. We're not a fund. We're not, an RIA. We help you invest your cash in your accounts. So we have a very strict no black box policy. It's not just, well, you wire to us and we give you some fixed return and then we try to scramble to make more. If you've been tracking the recent news with a lot of these big CFIs that went bankrupt and belly up very fast because of that particular strategy. And our strategy goes, it's your money, it's your accounts. We help you figure out how to move it and when to move it.
Wow.
And we just take a fixed, we don't take a part of your yield. So it's 100% pass through, you get it. We take a fixed software fee, basically. And that fee changes with the features and the complexity of the service. But if you're making 8% or 4% or 3% because you decided that you want to go into government bonds or you want to go into an AVE or a compound or whatever it is, that's your choice. And we're there to make it easy for you to get in and out of those. So that's what yield as a service is. It's all those components end to end between where cash sits in your account to cash making money and yielding and then back. So the optimal point is yield every minute. So in an ideal world, if you think about it, the concept of you looking at your bank balance, for example, in your account, and that number just sitting idle is not great. In an ideal world, that number, every time you look at it, kind of like every time you open the Facebook app or TikTok, or a news site, you have something new to see.
Wow.
So in an ideal world, that's what our technology is built to power. So it always in real time finds some other use for your cash while you don't need it. So somebody else might need it and then give you interest on it and your cash grows. So right now we're actually, the positioning of the company is how can we help business owners inflation-proof their business, right? And inflation-proof their cash, because inflation is something you don't control.
Yeah.
It's very macro. You have to be reactive to it, or you end up being reactive to it. And we want to be one of those tools where you can actually be proactive about inflation.
And it's real. I mean, Kary, you and your listeners know, I mean, the latest announcement was 9.1%. But depending on the industry you're in and which economist you talk to, the real inflation numbers are much higher. So there are some industries that are experiencing 20, 30, 40% inflation. I mean, I was talking to somebody in Argentina yesterday and they were laughing. They said, we've got 50% inflation a year. They're, and that's how they live. We're going into a new alternate reality where business owners now have to think very differently about how they manage every dime. And we feel like now's never been a better time to launch Poplar as a result of that.
That is good. So I like what you're saying. You're really changing the way that we understand money. You're saying money shouldn't be this thing that we look at and feel safe and secure because it's just sitting there. You would say, look, just like the weather changes, just like your health changes every day, your money should be changing. And if it's not, you're basically losing money.
That's right. I mean, the way this economy is moving right now, you are effectively losing money every day. One of the challenges business owners have, again, we know this from running businesses for many years, is especially in environments like this, is the pace where your costs rise versus what you feel comfortable in changing your own prices, right? So margin control is very challenging, and cash conversion cycles are very challenging when your margin changes. Again, inflation is not something generally most businesses can control. They're not a part of it. You always have inflationary forces in any market. You have inflationary forces, deflationary forces. It's a supply and demand thing. But when major governments worldwide come in and artificially start changing interest rates and pumping in cash, that's not something you can control, but you do need to react. So in our view, you have your core business, whatever service or good you provide, and you know your stuff. You're good at it. That's why you have a business. That's why you became an entrepreneur. And then you have cash. Now, what do you do with it? Because there's a moving target. And if you just keep 100,000 or $1 million in your account, at this rate of inflation, that 100,000 next month is not $100,000 in buying power any longer.
Okay.
So what do you do with it? And we want to be that place where you don't have to think about it. It's set and forget. You know, some of our clients have very simple businesses. They're like, well, they just have, you know, maybe a couple $1 million in a line of credit they don't use, some dormant line of credit. Some of our prospects have complex setups where they say, well, every time I get a payment from Shopify, I take 10% out, you know, put it somewhere for 2 weeks.
Right.
Because they know their margins and so on. And some of them want to match it to payroll. Some of them want to match it to ad spend and credit card payments. And there's just a lot. And the complexity is really driving from the business owner itself.
But also to add, we have a lot of friends who have raised capital over the past year and a half, you know, 10 million, 5 million, 70 million.
Wow.
They did not forecast 10, 20, 30% inflation.
No.
So, and they still have to hit their numbers in order to keep their share of the business. They have to hit their numbers.
Gee.
This is a real thing.
Yeah. So this number that I'm looking at, for some people it's going to make sense, other people it's not. But talk to us about the different qualifiers, BPS, automated withdrawal limits.
Yeah. So, yeah, that particular thing for people that are not watching the video, he's looking at a calculator on the website comparing, you know, investment returns over time. So this is like over 1 month. If you put in 80,000 or 800,000, how much would you get relative to putting in basically a savings account? Now, there's a lot of options to deploy capital. Savings account is obviously the most popular one. What BPS is a financial terms. It means basis point. Okay. So 1% means 100 basis points. That's how it is. When you hear like Warren Buffett, talk, he's thinking, how can I deploy, $5 billion or $50 billion, which is a very short, very small amount of his cash, in something that makes him 50 basis points or 70 basis points, right? So hundreds of basis points, full percentage points is a big deal. And a normal CD or savings account would right now give you like 3 basis points, 0.03, basically nothing. Effectively, it gives you nothing. Certainly with inflation, it's by definition, it's negative. And that's a big deal. I mean, right now, if you think about it, if you put in a savings account, or if you don't do anything, you're locking in your losses with inflation.
That's like what does Michael Saylor say? It's like the ice melting on the counter.
That's right. It's just there, and it's just going down every single minute. You're losing every minute, right? We're trying to
make a decision to fail by not making a decision, actually.
Yeah.
Wow.
Now, these instruments exist. Savings accounts exist. Some banks, especially now that interest rates are rising, are trying to be competitive and give you more attractive interest rates. But there's a few catches with that. So one is liquidity. This is a big deal for business owners. So it's not just how much money to invest and how much you make, but rather, is it locked? Is it available to you? Okay. So with a normal savings account, for example, that pretty much all banks offer, withdrawals are limited to about 6 times a month. So you have to be very deliberate about it.
Wow.
If you want to make sure that you have access to it. And it's not automated. So to be honest, if you have a savings account, because we're indifferent to where the money goes, right? We just want to make sure that it goes somewhere. If you have a savings account that's giving you now 2% or 3%, which is great, and some of those exist, you should sign up with Poplar, connect your accounts, and set up an automation so it just automatically goes to that savings account and then automatically comes back to your checking account when you actually need it for working capital.
Gee.
So the issue with investment is not just, in investment circles, there's a very common saying, which is not time in the market is better than timing the market, right? If you think about,
I like that. I never heard that.
yeah, well, it's an old adage, and it's very true, because trying to figure out when to sell and when to buy is you need to be a specialist in whatever industry you're investing to really know the signals. And it's very difficult. Even the best experts in the world, mess up with that all the time.
Yeah.
So it's better to have a good allocation, a portfolio strategy where your money is allocated in a way that's you're gonna take advantage of the market when it runs, and you're gonna limit your risk when it goes bear, like it goes now. But more importantly, especially in the business context, as opposed to a consumer or retail investor, you need it liquid. You need it liquid so you can use it for the actual business purpose your business is built for. That's why most of our focus right now, and certainly later we'll expand, is on fixed income products, meaning it's not about taking your hard-earned dollars and going all in on Bitcoin. We don't think that's a smart strategy, and we don't recommend people to do that. If you have cash, put it in cash equivalent instruments that take cash as a deposit and give you cash as interest. Now, sophisticated users, professional users that have crypto assets or other type of assets, or want to get to other types of assets, that's great. They can certainly use Poplar for that as well. But for the normal everyday business owners, you have cash, put it in a fixed income product, varying degrees of liquidity for varying degrees of interest. Generally speaking, like any investment, the more you lock your money, the higher yield you're going to get. That's kind of the game you play with liquidity and interest and risk, or yield and risk.
Okay.
But do it in a way that you can access it when you need it. And that's a big part of our technology, because in the big guys, the billion-dollar companies, they have treasury departments. They actually have treasure, right? They have a lot of money rolling around. And
like a dragon.
That's why they have treasury experts. You have treasury conferences. You have treasury analysts. You have treasury principals. It's like a whole thing. It's a whole specialty. And then you have treasury management software, which is also an amazing category. But you know what? If you have $5 million, nobody's going to look at you. If you have $5 million, there's no even self-service option for you, to be honest. And really, even if you have 50 million, most people are not going to look at you. So there's a big market. Now, you and I know this. Most entrepreneurs are not managing those billion-dollar treasuries, right? Very few companies in the world have that. So we wanted to create a product for us, for people like us, that build these businesses, that have hundreds of thousands, millions, tens of millions, hundreds of millions, and they can take advantage of all that know-how and specialty, and that's where AI engines comes in. And it's really AI. It's not lip service AI. I'm not saying it because it's cool. I'm saying it because it actually is, and we can talk a little bit about that. Take advantage, instead of hiring a treasury team, or instead of taking it to a service that might charge, basically 20% of your upside. If they charge 1% on a 5% yield, that's a lot. And just get it, and it's all your money, and you don't have to worry about, well, I wired my money to some company like Poplar. You never send money to Poplar at any given point in time. I wired my money to some company, and I really, really hope they're going to send it back when I want to. The way we work is that it's your account, your bank account, and you need a wallet? We'll create a wallet. It's your wallet. You have the keys. You can go into.
It's like you give us the private keys, and it's what do you call it? It's a cold wallet.
It is a hot wallet. But it is a hot wallet. But we have a lot of technology to protect that. But we give you, but it's yours. It's completely segregated. So there's no situation where your money is, rolling around with another client and those kind of things. Maybe in the future, maybe if Poplar extends and maybe Poplar becomes a bank, maybe we'll get into that. But right now, our philosophy and our guiding work plan is it's your money, your accounts. We help you move it. And our value proposition for you is on the insight of what's safe to move and when, and then where to move it so it matches your liquidity needs and your business needs.
Now I know why you like this, Genevieve.
Yeah. It was a big, the big eye opener for me when Lior was first teaching me about DeFi, because I was like, how can this is too good to be true. How can you get these kinds of returns?
Yeah.
And then he showed me this website called Prosper. And he's like, look, right now, hard money lenders, you may have heard of that in real estate, right? they're making 15 to 25%. You do hard money lending and your money is locked until that building sells or that remodel is done. Or,
Wow.
a number of things need to happen. Your money's completely locked. And when he explained it to me, like, look, DeFi is an opportunity to lend your money in a fully 24/7 liquid way. You just have to decide which platforms that are the safest and the smartest.
And that's where Poplar.money comes in.
That's one of the things we do. So,
Wow.
one thing that's great, Lior and the team, we have a whole team that, look at all these different DeFi protocols and have made a decision. And so a couple of things we do that you don't have to if you choose to use Poplar is, we only choose the protocols where the management team is fully documented. We know who they are. It's not like a Twitter handle account somewhere in the universe.
Right, yeah.
We know who the money is behind the protocol, the VCs behind it. They already have tens of millions of transactions. They've been proven to be solid. We know that the protocols have an ability to liquidate, meaning they can afford to pay you back when you need the money. So they're over collateralized, right? They're not over lending. So they need to have contract structure where your money's not, at risk. And then there's another level that most people don't know, which is you want to have that monitored. We know a number of people who are already investing in DeFi and they got busted. You heard about this on the Terra side because they had an algorithmic stablecoin that depegged from the dollar. We have a tool that monitors depegging. We would have gotten our clients out at 2%. The likelihood is they wouldn't have lost any money or almost nothing. They wouldn't have noticed it because the yield was. So on top of that, we have other technologies that monitor when a hack is going on actively. And we can, not every time, but we can very often pull the money out while there's an active hack going on or some sort of anomaly that's unexplainable, that's not worth the risk. And then all that happens is we pull the money out of abundance of caution and put it right back in your account. That's being monitored at the microsecond, 24/7. That is not something you can afford or have time to do. So at the end of the day, what really is going on is if you're going to invest in DeFi or stake your money in DeFi, why wouldn't you use Poplar? It's crazy not to, right? Because your money's going to be a lot safer. You don't have to manage wallets. Do you know what's going on right now with a lot of businesses that are investing in DeFi? They want the outsized returns. They're doing it themselves. They're going through the 8-10 step process. They have to get a multi-sig wallet, meaning multiple people right now today, every day, are getting on Zoom to move money around. Let's hope nobody has an accident. The one or two people or somebody goes rogue. That is just crazy.
Yeah.
And that is what's going on right now. We get rid of that. You don't have to do that anymore with our system. So there's all kinds of little things that are huge time wasters that don't give you access to the efficiency of DeFi if you choose to go in DeFi. And again, as Lior mentioned, that's only a part of our business, but it's a great risk profile, or you can manage that risk based on what we're offering, and it's a great mix, opportunity for your investment. I don't know, Lior, did I miss anything on that?
Yeah, no. We can talk about, Kary, I don't know if it's interesting to talk about risk at all for your.
Let's do that. Yeah, we have about 10 more minutes. Let's talk about that. And I want to say one quick thing. It's funny that I have to say this, but it's true. I'm not giving financial advice on this podcast. Neither is
we aren't either, by the way.
Neither is Lior or Genevieve, but they are blowing our minds, at least my mind, on there's a lot of mystery. There's a lot of it's like we all know in our gut we're supposed to be doing this, but we're scared because it's all brand new.
Yeah.
So go for it, Lior. What do you have for us?
So risk is interesting. When we started with our customer interviews, prospect interviews, and investor pitches, and kind of seeing the just array of specialty and knowledge of this space. And to your point, you can have extremely capable people, financial experts, and they are completely scared of this. They don't want to touch it with a laser pen.
Yeah.
And then you have super experts that think they know all the risk, and that gives them overconfidence on what the risk is. And then you have complete hyperboles on risk you should take care of, which is actually not that important, not that relevant. And what we found is that risk, it's kind of like weather, and I'll explain that. So when you hear there's a 30% chance of rain or precipitation, most people don't know what that means. Like, what does 30% mean? Is it 30% of the day it's going to rain? Is it 30% of any given hour it's going to rain? Is it 30% of the area that you're reporting on is going to, like, what is 30%, risk of rain? What does that mean? And a lot of companies have tried to create that level of simplicity with regards to blockchain and with regards to investment in general. And the reality is there's a lot of nuance. So the technologies that we developed are there to try and mitigate and manage risk. Risks exist in many levels.
Okay.
You have, for example, what Genevieve spoke about. If you had invested in algorithmic stablecoin, you have a DPEG risk. So you need a DPEG monitor, and you need a way to make sure that you can get your money out. You have network risks, right? So Terra actually had two interesting problems when it collapsed. Problems for investors, that is. So one of them is the DPEG, which is a problem because you own an asset and then that asset is worth less. And when we say it's worth less, we mean we can redeem it for less. That's really what it means, right? Quantity is the same. But the second one, Terra, being effectively centralized, froze their network for a few hours. And that collapsed so many projects that were dependent on it because people couldn't write transactions into the Terra blockchain.
And it creates massive panic and insecurity, and then it just spirals.
Panic, and because this is a digital ecosystem, a lot of bugs, because a lot of projects didn't account for that use case. So one of the other types of risks. So if you're in a private lending protocol, that is a counterparty private lending protocol, meaning you put in and there's another party on the other end that borrows your money,
yes,
and puts collateral in favor. So maybe you have $100,000 worth of Bitcoin, you want to borrow USDC, you want to borrow cash. You have to put in that Bitcoin, and then the protocol or the contract would let you borrow up to whatever, $80,000, $85,000. And it would tell you, hey, if Bitcoin drops by whatever the protocol is, 1%, 2%, we're going to automatically sell your Bitcoin. Now, this thing that automatically sells your Bitcoin is its own smart contract. It's a piece of code. Part of the way we integrate, after we very carefully select contracts to integrate with, is we monitor the liquidator contract. Because let's say everything looks good, liquidity looks good. Yeah, these guys have $1 billion in assets and they're only having $500 million in loans. But some coder updates the smart contract on the liquidator and suddenly it stops working. That's a change of risk. So maybe a risk event didn't actually happen yet. Maybe somebody didn't take advantage of a fast-moving market and try to drain money out. But for our standpoint, risk levels have now changed, and we have protocols to deal with that when that happens. So, and then you have risk of transfer. You asked about keys, hot wallet, cold wallet. Who has access to it? Signatures. Is it multi-signature? Who has signatory rights on these things? We've developed a lot of technology to deal with all these points of risk. So you have risk of transfer. What happens when money transfers? How do you mitigate that risk? Risk of liquidity, like Genevieve had mentioned, risk of asset value changing. Some of our clients told us, hey, no matter what, we don't want to deal with protocols that go into the Binance Smart Chain. Why? Because it's generally Chinese controlled.
Okay.
And they don't want, to be exposed to that because it has similar qualities to Terra. Now, the likelihood of that, hard to gauge, but that's just a type of risk they just don't want to have, period. Some of our clients tell us, we don't want crypto, period, right? It could be great, could be very safe, could be high yield, could be liquid, but they just don't want exposure to crypto. They prefer the traditional finance options, which we support as well. We support a lot of traditional investment options, and you don't have to go into crypto if you don't want to. Or maybe, like Genevieve said, we have clients that are super active crypto investors. They're experts. They're really great. Could be, proper DeFi funds, trading funds. They have a lot of money. They know exactly what to do, but they don't have a way to live monitor those investments. So then they come to us and kind of say they don't need us to help them make decisions. They already made the decisions of where to go and how much. But can you just monitor it in real time and make sure that if something happens, you bring the money back to us? Yeah, sure. Why not?
That is so good.
So risk is complicated, And it's a nuanced thing. It's a multifaceted thing. You need to build proper tools and proper processes and internal compliance controls for all of these things, and then you can manage it. But it always exists. Somebody asked me, well, what's the guarantee? I'm like, well, I mean, if you show me the insurance company that underwrites insurance for investments, please make an introduction. I haven't seen it yet.
It doesn't exist.
Yeah, but then we tell them, hey, here's what we do know. Your money's going to be worth less, period. You're going to lock in your losses with inflation, period. What you see in your cash, it is going to be worth less. That's a fact. That's not a debatable thing.
Wow. Or it is worth talking about how, Lior, can you talk a little bit about how the DeFi protocols that we like have been just fine? I mean, you're getting a lot of bad news in the market, but the reality is, right?
That's right. A lot of the bad news that have been really, it's almost like a disease at this point in the past few months. These huge organizations that collapse because of humans doing improper risk management.
Wow.
That's
like Celsius.
Yes. So Celsius, for example, there's a few. I don't necessarily want to target them or paint them because they're not the only ones, and they didn't trigger this cascade either. Here's the challenge and the opportunity of DeFi in general, right? DeFi being code-driven, and machines do what they're coded to do, and they do it without any emotions.
Yes.
When humans are in play, they have emotions. Sometimes that's very valuable, but in cases of finance where you have strict guardrails and your protocols, you would really want non-emotions to deal with it. Now, the normal world of collateralized loan, which is huge, right? I mean, you can go to your brokerage account right now and ask them, hey, can you give me some cash against my, Berkshire Hathaway stock? They'll do, yeah, of course, we'll give you cash. So it exists, and if those stocks fail, they're going to give you a call. Hey, Mr. Weinstein, if you don't send some money or whatever, they're going to do a margin call. There's a lot of value for the human element there. But in a world where this is either a permissionless environment, or maybe it's a permissioned environment, we'll talk a little bit about that, but it's human to human, where I don't know you, you don't know me, but we're doing a business deal together on the blockchain. Code is very important. And the real DeFi protocol, I would say the blue chip DeFi protocols are actually phenomenal. They aren't crashing. They're doing great. They're yielding, they're liquidating. Interest rates are lower than what they were 6 months ago because demand is dropping with the big macro financial state. But they're actually great, as opposed to all the CFIs, which are basically telling you, yeah, we'll give you 8%, 9%, 5%, but then they're trying to run around and figure out who can give them more and make margin. And that's a whole manual thing. So they might meet some guy that seems very reputable, and they might be, and they make a handshake deal with them, and all the lawyers are going to talk to each other, and then they're going to give them a wire of $300 million. And then they basically really hope that if push comes to shove, they're going to get their wire back. And that's exactly what the mechanism that had failed in this case. So I can't imagine how much money law firms and businesses had spent on these business deals, and only to fail, like this, which cannot really happen in a well-articulated and coded DeFi protocol.
Awesome.
So it's always good to balance the risk with the opportunity, right, Kary? Because there's a reason why sophisticated people are absolutely still in mass going into DeFi. So there's a lot of profit to be made, and especially for businesses, and being able to access it smartly and intelligently is still an enormous opportunity. I want to add too, we didn't really, before we close, Lior and I are going to we have a wait list on our site if anybody wants to get on it. And we can let them know when we're ready. We'll be doing a slow rollout. We're doing a slow rollout right now. And also, as a company, we're still raising some capital. So we've got $2.5 million left in our raise. So since I'm the chief revenue officer, I have to raise my hand and put in a plug for us. So we're looking for some great partners and strategic partners. We've already got some great investors in a very short period of time. So we want to finish that out. So that's my big focus right now.
That's fantastic. And I know you probably are all over the world, like most businesses these days. You don't have a central place. You're in the metaverse. You're all over the place.
Well,
Correct.
sort of. I mean, Lior and I are based in Atlanta, but we have a team out of Israel. We have a team in different parts of the US and
Perfect.
around the world. I mean, when you're
Okay.
talking about blockchain developers and this level of code, Lior can speak to this. I mean, you have to go where they are. And there's a lot of great talent in Israel. And, you know, you can tell Lior Weinstein, kind of a dead giveaway.
Ah,
The accent happens to be Israeli, so he's got an incredible network of folks who are in that space.
well, this is exciting. And, you know, tell me, do you have, as we close here, do you have a blog or any content that you're putting out, or not yet? You're really focused on building it.
Yeah, right now our focus is creating a great product, working with our early clients on their actual needs. We generally have a product-led based development, and that's customer-driven. That's really where we'll focus out. We'll probably start doing marketing work. Genevieve had spoken like 3 panels and conferences last month.
Wow.
And really our specialty is how can we make Web3 accessible to enterprises, right? How can we make the world accessible to people that are interested in a very easy way and safe way and at the very least manageable. So we'll probably start with all bigger marketing activities later in the year.
Sorry, you remember the haircut, the mullet? So we look like, you know, Web 2 on the front, but it's Web 3 on the back.
I like that. I got
super
that.
easy to use, right?
Yes, I like that analogy. I wish I had hair. Just saying. But no, this was fantastic. I think that's why I wanted you on the show, because I believe, you know, I look at the world through authors, publishing, IP, entrepreneurs. You look at it through DeFi, and really there is a definite overlap. So this is awesome. And I'm going to encourage our people to go to poplar.money.
Yes, sir.
Poplar.money. And like Genevieve said, they're in a fundraising final round, and we're excited to see what happens and hear some of those case studies.
Thank you.
Thank you. And, you know, Kary, you asked about being, you know, blogging. We just thought that Blockchain Life would be our blog for this month. So thank you for that.
That is okay. We will do that. We will absolutely do that. We'll push it out. You share it. You share it. We'll publish it.
Absolutely. Thank you.
All right. Thanks so much. Thanks for being here. We'll see you later.